Hi, I am Farsha Zoni binti Hassan.
Hi, my name is Auni Nadira binti Abdul Rashid.
Hi, my name is Nur Izzati.
Hi, I am Christina.
As a one-of-fund manager, I want to suggest to my client to do investment in shares, and I estimate the capital value of the share that my client will invest is 2,100 ringgit Malaysia. Next, there are amounts of company that my client will invest in. First, Petronas Gas and Berhad. Second, Sunderby Property. Third, Suntex. And fourth, Nestle. As investor, my client should open Central Depository System (CDS) with participating organisation (PO). Second, the investor should engage a reminder to remind or give order to sell or buy a share of the company. Third, the investor can placing an order. Fourth, the price will match with the order which is by market force. And fifth is trade confirmation. After the price and the order have matched, the trade confirmation will print out and provide the detail of the transaction, which is like original of the stock or price or the quantity of the stock. And six is contract notes with if the detail of the transaction, for example, is the stamp duty, the brokerage, or the sale of the purchase. And lastly, the delivery and settlement. The settlement and delivery will do after 2 days of the transaction date. First, by looking at the research annual report of company share, which is the company is good or not. And second, by looking at the price of the company share. If the price of the share is below, investors should buy it. And third, it is share did not have specific amount to buy, but the minimum of units that the investor should buy is 100 units. The return of the share is high, and it is because of the risk also high. My client will get 20 until 30% as the return of the share. Yes, do investment in share is high risk. Although the share is high risk, I also choose share because the share is in medium and short terms. So my client will get the return or the reward in a short times.
So I will continue with my part, which is investment in unit trust. So I choose to invest in ASB with capital RM150,000. In ASB, the maximum unit that we can invest is 200,000 units. So there are three ways that we can invest in ASB. First is using cash. We can just use cash to invest in ASB. Second, from salary deductions. We can invest through salary deduction, but first we need to make sure if the company we work for have registered with ASB or not. Salary deduction can be used if the company have registered in ASB. Third, that we can invest in ASB is through ASB financing. So ASB financing is one of smartest way to invest in ASB. So for me, I need to make new registration, so I need to go any branch ASB and do it at the counter to open the ASB financing account. So there will be someone guide me to settle the process and so on. I decide on this investment because there are many opportunities that I will get through invest in ASB. Even though it is long-term investment, but it is also low risk. I can get dividend and bonus. So for this year, the dividend ASB is 4.25%, while bonus is 0.07%. 0.75%. It's quite okay. It also have liquidity because whenever we want to withdraw the money for emergency, it's still the same amount. And lastly, no sale charge if we invest in ASB. The expected return is high returns because we will get 6% return per year and RM 1 ringgit per unit that we have invest. Invest in SB is low risk, so I did not need to worry because it's capital guaranteed even is in long term.
For property investment, I assume that the capital value is 600,000 ringgit Malaysia. Detail of investment, I choose 3, which is a semi-detached house, 2-story terrace house, and condominium. First, you have to identify your furnaces stage. Second, you have to choose a specific real estate investing strategy. Third is you have to decide your investment property criteria. Fourth is you have to understand the market and the dynamic where you are buying. And sixth, pick the right type of mortgage to suit you. 7, use the equity from another property. 8, check the age and condition of the property and facilities. 9, make the property attractive to renter. And the last one, take a long-term view and manage your risk. First, you have to find out about the advantages of investing in property investment. Second, you have to find out about the capital to be released and the return to be earned. And the last one is investing in real estate is usually related to capital growth, so choosing a property that the most likely increase is the most important decisions. Property investment can get high return because the risk is also high, so I assume that you can get 30% from this investment capital value. Yes, property investment is a high risk. I choose to invest in property investment because it is long-term and profitable.
Capital value estimated is RM 100,000. The details of the investment is investing in Reits from Amanah Hartanah PNB. First, pick a brokerage firm. Next step is open a trading account and a CDS account. The third step is put funds in your trading account. And the last one, you can start investing. First, it does not require a huge capital. Rates are perfect for beginner investors. With as little as RM 100, anyone can give it a try. The second one is its easy conversion to cash. Rates are a wise investment choice as it is listed on Bursa Malaysia and has high liquidity. This means you do not have to endure many process and a long wait to convert your asset to cash. Unlike physical real estate such as houses, Reits shares can be converted to cash in less than a day. Just click sell on an online trading platform and the money will be credited into your account based on the number of Reits units sold. The third one is the high dividend payouts. In order to qualify for tax relief, a REIT distributed at least 90% of its earnings to unit holders. The dividends enjoyed by the investors are between 5% to 7% distribution every 3 months or twice a year, depending on the REIT fund manager. The number 4 is managed by the professional. But I don't know about shares, you say. There is nothing to worry as your REITs investment will be fully managed by professionals, unlike investing in physical properties where you need to consider the type of properties, home loan and real property gain tax RPGT. And number 5 is the tax advantage. Malaysian REITs are exempted from tax on the purchase of moving of properties. A Malaysian REIT does not have any stamp duties when it acquires properties and similarly when it disposes of an asset. The REIT does not have to pay real properties gain tax. These two tax advantage itself generates a significant amount of saving for a REIT's funds, which benefits are enjoyed by its shareholders or investors too. The actual return received by the investor in REITs is dependent on the performance of the property market. The risk is low because rates are said to be less volatile. Rates use property rental as its main source of dividend yields. As long as there are tenants, the dividend rates will remain stable.